Will home prices in California finally drop in 2025? And what are the cities that are going to perform best in California's housing market this year? I'm going to answer those questions for you in this video using data found on ReVenture app. The first thing to understand is that home values are still up in California over the last year. They've grown by 3.1%. And in a market like San Jose, they're up 8% in the last year. And so these record high prices across California continue to get more expensive. For instance, if you were to go to San Diego and you wanted to buy a 3-bed, 2-bath house at 1,400 square feet, you have to pay $980,000 or $667 a foot. Or if you were to go to Riverside, if you wanted to buy a 1,900 square foot home, you got to pay $760,000. Or if you were to go to LA to buy a 2-bed, 2-bath, you got to pay over $1 million. So these prices in California are really difficult for buyers to afford. And this is now starting to actually slow down the market because we're starting to see inventory slowly but surely pile up. The number of homes for sale in California is up 32% over the last year. That's the 8th highest inventory growth of any state in the US and suggests that price growth will likely slow in 2025 and might even go negative in certain cities. So I want you folks to check out this data. In California, there's currently 48,000 homes on the market in January 2025. You can see that this inventory level has more than doubled from the pandemic low and is now above the long-term average going back 8 years. So we're starting to see more supply hit the market, just as the days on market has increased to 66 days in January 2025, also above the long-term average. And so growing inventory and growing DOM, that's a positive sign, undisputably, for you as a home buyer in California. And one thing I think people don't quite understand in California's housing market is that the buyer demand is really low. The buyer demand is actually at close to the lowest levels on record in California right now. And it might not seem that way because when you go to buy a house in San Diego or Orange County or in San Jose, Santa Clara, the prices are still crazy. But actually the demand is really low. And it's that low demand which is now starting to shift the market. As you can see, the California Association of Realtors just released a report on existing home sales, and they showed that the sales were actually up 20% year over year. However, take a look at this, everyone. You can see the sales volume here to end 2024 was one of the lowest volumes on record and was about 20 to 30% below the sales volume in 2019 before the pandemic. And so this low sales volume, it's starting to become frustrating for sellers. Because a lot of these sellers in California, they're still pricing their homes really high, and then they're just starting to sit on the market for a long time and not sell. And in 1 second, I'm going to give you my forecasts for California's cities and housing markets here in February 2025, so you can understand where in the next 6 to 12 months prices might drop the most. But first, I want to talk about a big story in California in the last month, and that's the wildfires in Los Angeles and what impact this might have on the California housing market this year. Obviously, wildfire risk has been an issue in California for a long time, but it seems to be getting worse over the last 5 to 7 years. And now the big problem is that insurance companies are starting to either pull out of the state or ask for big increases in premiums. And these big increases in premiums are going to come at the detriment to California homeowners in terms of their monthly costs. With State Farm now asking for an emergency 22% increase for California insurance premiums. State Farm says that insurance will cost more for customers in California going forward because the risk is greater in California. Higher risk should pay more for insurance than lower risks. Over the last 9 years, the lack of alignment between price and risk means that for every dollar collected in premium, State Farm has spent $1.26 in claims, resulting in over $5 billion in cumulative underwriting losses. Some people say State Farm isn't really being upfront about what their underwriting costs are. Whatever the situation may be, it seems very likely that California and LA homeowners especially are going to see higher homeowner insurance premiums this year. That's going to cause, I think, some issues for existing owners in terms of being able to afford those increases, and will likely also deter some new entrants, some new buyers from buying into the market. So don't be surprised if we see the Southern California housing market slow, especially in 2025 post these wildfires. But one thing I want to do, everyone, is highlight a big regional disparity that's occurring in Southern California right now. And that's between the performance of Los Angeles's housing market, LA County, and then Orange County's housing market to the south. You can see in Orange County, prices are up 8.3% over the last year, which is crazy. That's one of the strongest home price growth for any large county in America. You can see actually it's 8th best behind a bunch of counties in New Jersey, Illinois, and Pennsylvania. Meanwhile, Los Angeles County is only at 2.8% home price appreciation. And in fact, LA is seeing declining prices in a lot of areas near downtown, West Hollywood, out actually into Malibu and the Pacific Palisades. These areas that got hit by the fires, values were already going down. They're going down in Venice and Santa Monica. So LA already was experiencing declining prices kind of in the center of the city. Meanwhile, Orange County, Anaheim, Santa Ana, Garden Grove, Irvine, prices are going up as much as 13% year over year in some of these zip codes. And the whole reason for that disparity, everyone, is inventory. If you look at the inventory metrics in Southern California, there is some big differences in bifurcation now starting to show up. In Orange County, inventory is still really constrained from its long-term norms, while in LA, it's growing closer to its long-term norms. And that's describing the differences in prices. And that highlights an important point for you to understand as a potential buyer or investor or home flipper in California this year. It's the fact that if you want to have a better idea of understanding where prices are heading, look at inventory. Inventory on its own is going to tell you a lot about the supply and demand fundamentals in the market and if prices are more likely to go up or go down. And we here at Reventure App actually have a data point called the Home Price Forecast Score that takes into account inventory, days on market, as well as price cuts to let you know where we think prices are going to go up or where we think prices are going to go down. And the way to understand this is that areas in blue, we think prices are going to drop. Areas in red, we think prices are going to go up if you hit this home price forecast score. And so you can see here for Orange County, we still have a positive price forecast score of 53. That's 53 out of 100, indicating prices are likely to remain stable or still go up slightly this year. While in LA County, we're down to a 45, indicating that we think prices are more likely to drop. We're even starting to see a market like San Diego start to tilt down. You can see a year ago, San Diego was a 57 out of 100 on the price forecast. Now it's a 48 out of 100. So I wouldn't be surprised if you as a buyer in San Diego and some other parts of Southern California start to find some relief in 2025. I think the issue is that even if price growth were to slow and then go negative in certain areas, the prices are still really expensive. I mean, folks, the typical value of a house in California right now is $780,000. That's not for a nice house. That's not for a good house or a big house or one with land. That's just a standard house that the average buyer is looking to purchase. That $780,000 typical price is more than 25% the second most expensive state, which is Massachusetts, indicating just how dire the affordability situation in California is right now. And so I think while I'm going to give an optimistic take for you as a buyer that things are going to get a bit more affordable this year, I'm also going to give a pessimistic take that I don't think you're going to see, a 25% crash in 2025 that's all of a sudden going to make the market way more affordable. Because one thing we got to understand is that home prices in California are 17% overvalued from their long-term norm. So there's quite a big gap between the typical home price and the fair home value in California right now. 17% overvaluation. You can see our typical value right now is 773. Our fair value based off incomes is 658. This gap of the actual home value being higher than the fair home value means it's risky to buy in California's housing market because you're buying at a time when prices are overvalued. You can see prior to the pandemic, prices were not overvalued. They were fairly valued prior to the pandemic. So if you'd bought in this period, you would have known that you were buying at a good time. If you actually bought in 08, 09, 2012, home prices in California were undervalued back then. And so you can actually use this overvaluation data in the fair home value toggle here on Reventure App to understand where your market sits in terms of its long-term over or undervaluation. And the general idea is the more overvalued a market is, the less likely you are to see long-run appreciation if you buy in that market, right? Because if the market's overvalued, prices relative to income, that means it's just going to be harder to achieve future appreciation, and it's going to make future depreciation more likely. And this is actually where I have my eyes set on Orange County. Because while Orange County in the short term is still likely to go up a bit, in the long term, I'm seeing that it's 31% overvalued. I mean, that's one of the most overvalued large counties in America. Typical home value is 1.15. Fair home value is 875. So that says that if you were to buy in Orange County today, maybe expect over the next year, you'll still see some growth, but don't expect in the long term that you're going to do that well in this market. And you can see most of California is overvalued. San Diego's 20% overvalued. San Bernardino's 23% overvalued. Kern County and Bakersfield's 21% overvalued. But interestingly, if we head up to San Francisco, everyone, look at this. San Francisco County is actually undervalued. And the reason this is because prices in San Francisco have actually dropped quite a bit. They're down about 15% over the last 2.5 years. So that 15% correction is starting to make San Francisco more relatively affordable to its history. Of course, it's still very expensive for the average buyer. For a 1-bed, 1-bath condo, you still have to pay around $600,000 in San Francisco. While that's less than you would have had to pay 6 years ago, you can see the seller here bought it for $720,000 and is selling it at a 17% loss. It's still pretty expensive for the average buyer. Okay, so let's get down to brass tacks, everyone. What's my forecast? What's my short-term forecast for California? And should you as a buyer get into this market right now? Well, I'm going to give the initial caveat that it totally depends where you are in California's housing market. You got to do the research for your city and your zip code to better understand the trends. But overall, I think California is going to slip in 2025 and basically have no home price growth this year across the state. That's what we're projecting at Reventure app. Our score for California is a 46 out of 100. That's below average. We're thinking prices are going to remain flat or go down slightly across the state. And we think that there's going to be the most weakness actually in Northern California, because Northern California is where we see the lowest home price forecast scores. Again, this is a score from 0 to 100. 50 is average. And if the score is below 50, that's more indicative of a declining market. And you could see we have a lot of blue, a lot of scores below 50, a lot of blue here in Northern California, whereas things get stronger in the center of California on the coast, as well as down to Southern California. So we're going to see a slowdown in most of the state, but I think this slowdown is going to be especially pronounced in the northern region. And just to give an example here, folks, in Sacramento, we could see this home price forecast score a year ago was 52, indicating that we thought Sacramento was going to appreciate in the last year. Now it's down to 47. Indicating that we think Sacramento is going to really slow. Sacramento in the last year is up 2%. It lost value a little bit. And the way this score is calculated is looking at trends in recent appreciation, days on market, mortgage rates, inventory, and price cuts. So we're ranking each of these subcategories for the local market in terms of its performance, and then taking the average of those rankings for the total score. We have this score available for most zip codes in California. That's the other important thing to understand, is that there's a lot of regional variation. Just look at Los Angeles, the difference between the center of LA, more towards Orange County. So when you go to www.reventure.app and type in your zip code, just be mindful of these differences, and you can find this data point under popular data, home price forecast. You'll need to sign up for a premium plan to access it. It's $39 a month. Ultimately a very affordable price compared to the cost of buying a house in California. You're going to want peace of mind about where your market is heading. So go access this data at www.reventure.app right now.